Then we have to see what equity is. Equity or capital. Now what does this mean? See here, it's very simple. Capital is the money that is invested by the owners of the business, right? Whatever money the owner brings into the business, that's called capital. Simple as that. But now you will be wondering, why do we have two names over here? You are saying equity or capital. Why two names? That's because it depends upon the different types of organization. If it's a simple partnership business, there will be few owners, right, who will bring in the money, and we can just call it A's capital, B's capital, like that, yeah, whoever has brought the capital. And then if it's a sole proprietorship business, then we can just call capital. Simple as that, yeah. But now, why am I saying equity? That's because, you know, if it's a company, then in company we don't have few owners. No, we have thousands and hundreds and thousands of owners, right? Shareholders. We call them shareholders because there in company the capital is divided into small units of shares. Yeah, so that's share capital. Yeah, so it may be equity share capital or preference share capital, as the case may be. So that's why we call it equity. All right, it's just different names, but the concept, rule and meaning is same only. Okay, see the meaning over here. It's same only. Okay, whatever money that is brought in by the owners of the company, that's called capital. Yeah, either it's just capital or equity share capital or preference share capital. Simple as that. Okay, don't worry. So see the technical definition over here. It is the residual interest in the total assets of the entity after deducting all its liabilities. Yeah, so why is it called residual interest? Because the equity, the owners, what do they get? They get whatever that is left, right? Whatever that is left, that is what they get. Okay, see here, when the company, company wounds up, what the owners will get? The owners will get whatever that is left. Okay, first the liabilities will be paid, and then their capital will be paid. So that is what is meant by residual interest. They have a claim. Yeah, the owners, it is the claim of owners. If someone asks you what is capital, then the technical definition would be, it is the claim of owners in the total asset of the company after deducting all its liabilities. Why am I saying after deducting all its liabilities? Because whenever, if you remember the definition of liability, yeah, they also have a claim, the claim of outsiders. We have to pay to liability holders, right? Obligation, we have an obligation, we have to pay something, do something. So that has to be done first, and then the claim of owners will come. Okay, so whenever there will be a liquidation or the company will wound up, first payment will be done to the liability holders and then to the owners. So that's why these people, the liability holders, will have first claim. These people, owners, will have second claim. All right, on the total assets only, total asset of the company, total asset of the company. Okay, so this is what equity, share capital or just capital is. It is simply claim of owners in the total assets. Now we'll come back to this, okay, with an example to understand how does that mean, okay, the claim of owners in the total asset of the company. We'll take an example and understand it properly. Don't worry, we'll come back to this, but let's see the revenue definition first. All right, so did you understand what capital is? Simply whatever money that is invested by the owners of the company, that's capital. And the technical definition is they have a claim. It's a claim of owners in the total assets because the owners have a claim. Clear? Yes. So now let's see the revenue definition. See here, the revenue definition is very simple. Yeah, what is revenue? Income. Simple as that. Yeah, it is the gross inflow of cash. Yeah, it's inflow, that's all. It's the gross inflow of cash. Yeah, either cash is coming in or receivables. Receivables means what? Receivables means someone has to pay to us. All right, yeah, someone owes us money, so they have to pay to us, so we are getting income, so that's receivables. Or other consideration, it can be, see, other consideration arising in the course of ordinary activities of business, such as sale of goods. Yeah, if we sell the goods, then we'll get the money, right? Yes, so sales is our revenue. And then rendering of services. If it's a service business, then we will render the services. We will not make sales, we will render the services and we will get the money, etc. And also interest received, all these things, okay, other things also, etc. means, right, interest received, rent received, whatever it is, dividend received, whatever we get, whatever income we get, that's called revenue. Simple as that.